Hello my friends, I'm Rocky Outcrop. This is Chainlink and Tezos technical analysis. I will put chapters down below at some point, but just skip to around about halfway if you're looking for the other coin. But what I'll be doing in this episode is looking at the trend, and of course it's been towards the downside. So let's see if there's anything counter trend which could give us some hope for a turnaround in the price action. Thank you so much for joining me. Let's dive straight on into the charts. I hope you have a wonderful Halloween, by the way. Let's start. So friends, let's take a look at this chart. It's nothing too spooky going on here. This is the chain link to Bitcoin one. I want to point out again, just, that of course, while this is a downward sloping channel in the background, a pitchfork, which is in effect is like a parallel channel as well. That inherently it looks negative, but there isn't anything intrinsically negative about this thing. It's just what it is. If we look over from where that 618 golden pocket zone was and consider that to be resistance from a horizontal point of view, then it simply means as well that it becomes kind of, in a sense, easier to break through these horizontals after a certain amount of time has gone by and you're able to go up past other areas as well. So just bear in mind that while this is, of course, towards the downside, it isn't intrinsically negative, but it does have negative connotations for us. And one of those negative connotations can be shown if I just take out a extension to the pitchfork using a parallel channel. Let me just grab this here real quick and draw in a parallel channel. This is how you do this, by the way. If you're interested, you can just use a parallel channel and extend your pitchforks out, no problem. You can see that this extension to the pitchfork, therefore, has had some curious interaction with the price action of late, having seen that we had these lows over there in September, and then again in October coming in and hitting off the extension to the parallel channel perfectly. In fact, you could even do this twice if you wanted to, and take this subsequently cloned one, pop it in here, and you can see that the next area down was also an extension to the parallel channel as well. So I'll just leave those two on there and make this point with regards to this shape that we have. Now, of course, this shape, this isn't me looking at anything counter trends right now. I'm just still looking at the sort of the trend, and this pattern here is a symmetrical triangle which has, of course, the chances of it going towards the downside are 50-50 or whatever, and currently it looks like we could potentially be breaking outside of that zone. That means that your full measure target could take you down towards this 57 area, or let's just call it where this extension to the parallel to the pitchfork is. Interesting. Yes, 61 is what I'd look out for, that 61k. We have got fake out territory to be aware of, and that's quite simply coming in here at this median line of the parallel channel. Looking to the left, if I just use this stick here actually and swing it around so you can see, looking over to the left, that's where our last lows were during the parallel during this pattern. That's an easy place to look out for fake out territory, and we can see that right where we are now, which is the most positive aspect about this thing, because currently we are moving outside of the zone of it, and in which case you really could be looking for as a textbook movement from the thing. Let's just get 60% of this so you can see. So if this is 100 and this is about 50, this is about 60 here, then stick that on and say, well, sure, maybe we could be going down to the median line of the subsequent parallel channel or something like that, and that could take you down to 67k. But we don't need to get too fascinated with this. This has numerous different ways of looking at it. We've had these three lows coming in here, for instance, and this low with this in-between area and perhaps this lower low, in which case, you could just ignore the pattern of this thing itself and say that we're in, from a trend point of view, if we go down lower than this in the 6th of October, we're looking at lower lows and etc. etc. So that would be the case. Now, of course, Bitcoin itself could pull back. We never know, and whatever else. Watch the Bitcoin and Ethereum episodes for information on that, and then maybe you'll have a better idea. Yesterday's episode, we talked about in the Bitcoin one how the pullbacks could have been complete at that point, and then we've seen the prices dropping down the way since because Bitcoin had a resurgence in its price. This all makes perfect sense. The fact that we've pushed outside of the bounds of that triangle is a little bit disconcerting, but really overall it's of no great consequence. In terms of the counter trend aspects of this, then, if we see this pricing closing down here where it is, this is 24-hour time frame, we're having at least equal lows at the minute, and we have had higher lows on the RSI down below, and that's bullishly divergent. So that's a little bit of hopium for you, and definitely some good counter trend indicator. In terms of the 24-hour time frame, we had this volatility box coming in here, showing us that when it ended, that we had this area that we've just seen being pushing outside of the triangle. Again, the volatility in the background here giving us a little bit of an indication that perhaps, while we remain in chop land in terms of what the DMI is telling us, and not actually strength of trend, that perhaps, we could see this reversing as well soon off the back of that. So that's interesting. We also have the divergence, I suppose you could say, in terms of this on the MACD from our most significant low to where we are. No, we don't really. There's various different ways of looking at this in terms of a pattern. Let's not waste all day on it. Just jump down to the 4-hour time frame to put the recent area into context for us, and you can see that divergence more clearly on here for us. It's not on the DMI. Actually, it is. It's on the DMI as well, but we're not quite there yet. We've not quite closed below this yet, but we're right on there forming equal lows, and we can say that there's that sort of Class B divergence there for us. So there's certainly some good news then in that sense. 89k towards the top side has got to be our positive first target back into that pitchfork. Then, of course, 93k where we have this 236 is obviously key. If we get either of those, both of those, then I think it's reasonable to look up to the 107,000 Satoshi area. Failure to do so, I think it's fair to look down towards 73,000 just in terms of our medium term trading. Now, of course, that is huge profit moves, 10% there, 10% up the way, 12%, huge moves. Yesterday, the moves that we saw happening, over the last couple of hours, like 20% drops off in prices. We've had all this good stuff over the last few days for us to look at. So, plenty of good trading to be had here, and you can trade it either way, of course. Looking over here at Link versus the USD, then we can see that we have this upward trend on the go, and that's more positive than the Tezos one. So we have to do less of this counter trend stuff, but we'll go on to the counter trend chat that we're having in the Tezos episode in just a second. Just briefly here, staying above $10.33 is the key for us. We've come down to our $10.75 target yesterday. We could see turnarounds from this point. We spoke about that price specifically, so that's obviously a low risk management trade area. We still do have targets down there towards the 10.33 area though for the best, sort of tastiest and easiest to manage risk target. But if you were trading it from here, topside target $12.19 would be reasonable and within greedy terms. Looking at that, you're already looking at more than 10% move. If we go up to that yellow line, you're looking at about 10% anyway, 11.69 or so. So that's a decent chunk up if you were to have traded off of the target that we spoke about specifically already. But then, of course, we still have this 10.33 area potential for us coming in here. Shout out to Keemster again, by the way, on the Discord, who was wanting some TA on this thing. There's more TA than you can shake a stick at, really, for you. If you were looking at things like the strength of trend, it's still in there with a negative downward aspect to it. 24-hour time frame, it's still here with chop going into volatility. Just had this crossover while we're in the volatility background area. Could expect to see some sorts of turnarounds here, but as well, this could come down and challenge the 236. I'd have to be careful about closers below this area though, because then we could be looking for downward side price action thereafter. Of course, targets on that for those coming at $8.20, $6.80 would be your two targets down the way for that. Look at Link versus Ethereum real quick before going over to the Tezos pricing. Perfect. Doing exactly what we talked about. This continues the volatility stuff background. We have this continued. At some point, the musical chairs will stop on this one, and then I expect we'll probably get our measured move from this. Like I spoke about in yesterday's episode, will that happen over there or not? Who knows on this particular date, which has got, I don't know, some sort of funny looking technical analysis reason purely off the charts for that November the 4th reason to be important. Really curious that, isn't it, how technical analysis works, that I can predict the future, that there's something in the real world that's going to happen. There'll be some news on the 4th of November of some sort. I'm almost sure of it. It's funny. So everything's the same as before. It's just working out perfectly. Everything's been going along perfectly. We have the chance here for convergence across the board during this triangle. That's all lovely. Neutral line coming in here for the stochastics to potentially get a turnaround at. That's lovely. Little bit of bearish divergence on the MACD between these two previous highs, giving us the idea that we could have negative outcome from this, but I would have to see that coming back up towards that 30k area probably first before, or 0.03 area. Very, wonderful stuff. 288, 288, 288. Again, perfectly done everything that we talked about in the recent times. It's all lovely. Everything's been looking great there. Okay, Tezos. Sorry, I'm just pleased at what we see here. Movements beyond 28, bad. Movements beyond 30, good. Fake out zone up as high as 32, fake out zone down as low as 25. Both of those 10% moves away. Fake out is enough of a trade out for you. I wouldn't necessarily play for the whole measure move off of this. You could be looking down to then 21. You could be looking up to 38. Huge trade-in coming up there. Right, looking over to Tezos, and as well, if you just jumped to this point in the video, thanks for joining me. And what we can see here is that this has been going on. Now, yesterday we talked about how we touched off of this zone perfectly, and then subsequently we've come down and gone past it. Okie dokie, so we haven't had a turnaround, and instead what we can see is that this wedged thing, if it is one at all, just continues at this point, as well. Having moved past this point from yesterday now puts me in a position where I want to draw it in more like this, instead, where you're almost looking channel-esque with it. Movements, therefore, which don't push past the 15 area for us are then kind of inherently negative. We have this Fibonacci retracement is coming in. Will this just keep on going until it lines up perfectly with all of our previous results? I wonder, what would it look like for it to come in here? Then we have the 236 and the 50 lining up with our traffic lights with a target off the top of them coming up with the 618. Is that possible? It is. I'd really want to see it stop happening. In the 24-hour time frame, is there anything counter trend? No. Stochastics. Well, the stochastics are pointing up, right? The stochastics are in this zone here. This is the oversold zone. Now, in the oversold zone, if we start seeing some divergences, that would be handy. What we can see is that the most positive thing we can say about this is that this is the lowest that's ever come on this chart. What about the other charts that we have? The USD ones, not so much. What about the Ethereum one? Is it the lowest it's ever come on that? No. But in terms of Bitcoin, this is the lowest that we've ever had in terms of stochastics. The movements towards the downside have really been pushing us. So this is the most positive thing I can say, and we are pointing towards the top side. Okay, so this is the bullish. This is where we've got some counter trend thing here, but there's no divergence to go along with that, unfortunately. Not really. So that's the lowest ever been, therefore not divergent, but still it's ticked around and it could look decent. That's me using a simple moving, an exponential moving average, by the way. Let me just bring up the thing to show you if we were to use the simple rather than the exponential. It's very much ticked around at this point here in terms of the simple. The exponential one is right on top of each other. So we're still waiting for that to play out, but to fully form. Hesitant. Shut up! Bloody alarms, or whatever you call them, sirens. Anyway, so there's nothing good there, right? Apart from the stochastics have turned around, and that could be the most positive thing for us. There's nothing good here. This is all very negative. Apart from that, the DI is come up here to this area, which is very much a looky area for us. Pardon me. Looking back the way, you can see how when we move up to these areas that, while we can extend beyond it, certainly can, that this is a common enough area for us to turn around at in this zone here, where we have that line. If I just change it over to use the solid numbers instead, you can see we're right at that point here of the 40. That's something that I look to with regards to this thing. If we see this turning around, it could turn around fairly rapidly as well, given its extension that we've had. So yes, that's the most positive thing. Looking at it and saying, this is negative, right? This is negative. We've got a bearish trend on the go. It's very much a strong bearish trend, and it has been for a long time here, okay? But perhaps we've got to the point where it's become, so stretched now. That's what that's saying to us. If we see this crossing down below, then the ADX will have crossed over both of the DI lines. Then what you could be looking for is a turnaround in the ADX. That'll be your go signal for counter trend longs, of course, bearing in mind that the trend is your friend, so you'll be counter trend at that point, still looking for things to continue down the way. 4-hour time frame, therefore, in terms of finding some positivity for us, and it comes in at last. And so we have bullish divergence on the RSI here between these previous two lows. We have bullish divergence on the stochastics, while they're also erect, pointing towards the top side. We also have the this has crossed over them. It turned around back over there. During the night, you could say, as we came down the way, we've seen the strength of trend go off. Now it is pointing towards the top side slightly again during this period, then down again. Let's see if we can get this to come down. Once it goes below 40, I think we'll probably see something kind of happening in terms of the movements here. We also have bullish divergence on the MACD coming in here for a little wedgie area again, just like kind of like I was hinting at before when I was trying to sort of do it on the this narrower thing that we've got. This is what I'm looking at here. So we have all of this. This is it. If we do get a measured move off the back of this, it could take us up towards our previous sort of consolidation area at 1750. That's a huge move up, by the way. Just be aware of that. From our lows down to up here, that's another 25%. So we're finally getting to the point where we've had enough pain where you could get some serious pumps against the trend and still continue with the bearishness. But this is obviously quite a bullish pattern in the way that looks. Could we go up towards the top side? Indeed, we could. And yes, taking out this target 1723 would be our first one. Let's draw in therefore a Fibonacci retracement from the point of our high up to our low to get a handle on where we are right now with regards to this. So movements past 1552, very, very positive. This takes us up to the 50% area where we could see, that move that we're talking about, the measured move, 50% common retrace area. That's perfectly makes sense there. 618 takes us in at our red line. Of course, that there, a perfect area for that to be at. So be aware of all of this if you're trading in this thing. Those are our counter trend signals. We are in a downward trend, right? Continue. Dollar pricing, perfect. Again, right on our pitchfork. We've come down to where we kind of needed to. I spoke about this in yesterday's episode. Did had 2 pitchforks on the go. Said about how we came down here, the green line, gosh, we came down, we hit it. Now, can we retake the green line at sort of this price where we are right now? That was kind of what we're doing just now. We don't have divergence on the RSI. We have it on the stochastics. It is pointing towards the top side. That's good to see. We have, of course, the ADX having crossed over. Both of the DIs is now up here. Let's see if it curves around and comes down the way, just like I was speaking about before. That could be our positive thing. We had the end of the volatility period that brought us down towards this zone. Outside of this pitchfork, I want to see us recapture this zone here, these zones. If we don't, then the next target that I'm looking to is going to have to be in terms of the negative, in terms of, let's be honest, because we need to look at trends and talk about them. So the next target for this thing right now actually is as low down there at 175. But let's also bear in mind that we've caught the median line of this. We caught the extension. We've caught the green line we spoke about, and we could see movements towards the top side, and that would chime in with this pitchfork that we've had here. And of course, this remains with the case, the negative slant on it, but then it gives us a top side potential target if we did turn around all the way up there at 237, miles away from where we are just now. You're looking at, in terms of percentage increase in prices, nearly 30%, huge amount of trading to be done there. If we see movements past the points of $1.95, that's very, very good. Then we can start to be quite positive. We can look towards targets of 205, 213, and 223. 213 being a really key area because that's where we had previously a 236 Fibonacci at, where this 50% is coming in at, and that could potentially be the start of things turning around for us from a bigger point of view. Of course, that's going to have to also be a very key profit-taking target. Likewise, 223 for us there on that one. This is the story that we're in. It is not being good. We are lower than we were previously over here, and on the RSI though, you can see compared to this low here, this is where we find our most positive story to be had, and where we are just now. Bearing in mind that we did anticipate that we could come here, then we've done what we could have done, but while we did it, we didn't do it with divergence. I thought when it was zoomed out, it looked like this was lower than it is here. It looks like it really on this screen. When I zoom in, we've not done it with divergence. So, there we go. That's that. That's what it is, isn't it? It's funny how it looks like that to me in my eyes as I have it here. But no, clearly isn't. Don't know why I'm so blind. Then, yeah, do we have it on the stochastics? What's the point in looking at that? Yeah, that's us for the Ethereum, for the Tezos to dollar pair. And let's take a look at the Ethereum one now. And we just keep on going down. This is where are all my drawings gone? They're in a different time frame. Oh well, whatever. We've been in this downward move. We've not had anything positive really to talk about. We had the head and shoulders up there, which played out negatively, and then of course got our full measured move off the back of all this. Now at this point, we've come down towards our equal lows. This has got to be remaining as our next target towards the downside down there at 41. If we were to turn around now, then we can look up towards a couple of numbers. If we get up to 0.068, that is of course going to be the first positive thing for us, but we've not been doing well. We really just need to see stability in the dollar pricing and the movement upwards in dollar pricing, actually with some sideways for Ethereum, or else this is just the story is just what the story is, guys and girls out there. We've been talking about these lower targets with regret, but talking about them, and 41 remains in place as our lower target. To 43, let's call it then. It's another more than 10% chunk towards the downside. Again, trading to be had. The strength of trend is here. It has crossed over. Could we hit 40 before turning around? We could. We have this triangle here, which we've kind of come outside of on the 24-hour time frame. I've got the 2-day, 3-day. Yep, we're 4-hour. This never really worked on the 4-hour. We've got this shape here, and it's just gone on and on. We've got lower lows with lower lows in the RSI. This is just kind of just adding up to what it is. Let's just see then. We still have this. We can call it more like a descending triangle now at this point. If we see that these lows, which have not managed to not come in with, it's like a descending triangle that we've kind of broken towards the downside at the minute, but we haven't really, because this is where the bearish control zone is and everything else. If we can see a turnaround here, yes, it's positive. This is what we've got on the go here. It's the same thing as on the charts, it's the same thing. It's like we've got this downward structure, and we've had it for ages. And we're right at the apex of it. Could we turn around? Yes, we could. There's a lot of potential for counter trend here, but it's towards the downside, and that's that. That's what we're looking at. Could we turn? Yes, we could. Is it my opinion? Yes, it is. Will I be taking myself personally? Be taking short or longs, which I manage the risk of very, very well, etc., in order to not really lose out during these periods, to be able to take advantage of any moves? Yes, but will I also be thinking to myself that I could hedge that down to this area? Yes, I will. You've got to be aware of these things, It's not great, but we do have the potential, just this pain, this dagger in our throats, but we have the potential to go up towards the top side. But it's not screaming at us that it's definitely going to happen or anything. What we really need to do is remember what we've been looking at on the other price action things, like over here on Bitcoin and Ethereum. Look at those videos as well. Be aware of the entire market, and as well have a wee idea about how things like Chainlink and stuff like that are doing too as we go along the way, and see if these alts can improve. Because when we look over here at the Bitcoin dominance, what do we see? This is moving up outside of this area. If this was at one point a wedge, and this was a measured move off of this wedge, then what you could see happening would be that the could just go all the way up towards where we have this gap, fill in this gap, 66. That would completely slaughter altcoins. So let's hope that this doesn't happen, right? Essentially. Catch you next time. I'll just zoom out. I'll zoom myself big. Thanks so much for watching. I've been Rocky Outcrop. Really do appreciate it. If you want to hit that join button, great. If you can't afford it, subscribe button is right there. It's free. I'd really appreciate it. Hit the like button as well. Share it with your friends. YouTube.com/Rocky Outcrop. Best technical analysis on the internet. Thank you so much. See you next time.